Welcome. We apologize for creating a long-form AI text-speech video, but we think this content is invaluable. You can find this on our website at cryptostatto.com if you prefer to read it. Remember, you can speed up videos to increase the audio. We provide market data reports on the cryptocurrency space, so head on over and register for free. We believe in clear and consistent data to help those involved in the cryptocurrency space. Come back to this channel, as we will start to publish our data regularly to help you understand more about the market. I will be doing real human videos in future. The most important thing to take from this is that it is not just in cryptocurrency where you can lose vast amounts of money. None of this in the article is meant to be pejorative, offensive, but are instead looking to give a little more insight into the market. The few that became wealthy through crypto may have lost a lot at some point, and will lose again. Many lose money, never to return. If you are a crypto influencer and feel this to be unfair, tell me. I can take it. Perhaps we can work together. Finally, AI-based text for some reason cannot say Cardano. Listen to the message rather than the messenger. Have you ever heard the phrase, "What's good for the goose is good for the gander"? I like to play around with this phrase to give it more relevance. What's good for the goose isn't necessarily good for the gander. In what may seem to be a Gerald Ratner-owned goal, the only time an individual will be named, we really want to make sure that those venturing into investment in general and in particular cryptocurrency really have a handle on the market. Quite frankly, we're disappointed to see widespread mismarketing of what is an exciting and innovative space with huge potential. The philosophy on Crypto Statto is to accumulate coins over a long period of time without putting in much fiat, moving towards preserving wealth over the long term. The belief here is that retail investors should use multiple tools to make informed decisions when buying and selling cryptocurrency. For example, we use multiple online platforms to get insights into the market to try and have regular reviews of individual assets and the market in general. Some ground rules. This article is opinion-based and is not intended as financial advice. Please do your own research when investing. Aside from naming a few cryptocurrencies, this article henceforth avoids naming individuals and companies to focus on common practices. We are not going to give referenced examples, and you can consider this article to be experiential and thus polemic. This article will be quite extensive and not just covering the crypto markets. Sticking to these rules may mean you miss out on bigger potential gains, but hopefully he will go into the market with more perspective and wisdom. If you don't understand anything in this article, do your own research. If you think you understand anything in this article, still do your own research. You can lose money in all markets as a retail investor. It cannot be stated enough just how so-called safe markets are unsafe. Despite all the so-called protections offered by governments, the average retail investor loses out frequently. Bonds. Bonds are a debt-based instrument that companies and governments offer to acquire capital in exchange for paying the bondholder interest rates known as premiums. There are many variations on bonds such as zero-coupon bonds. Investment banks can also strip the coupon from the bond to create cash flow-based products for investment. How you lose money with bonds. Default, the bond issuer cannot repay the bondholders the capital and they lose their money. Inflation, governments increase the rate of inflation and the amount you earn on the bond is lower than the inflation rate. This is one way that bond issuers can profit off the back of the bondholders by using the money given to them by bondholders to then buy bonds with higher coupons. Other features of this investment vehicle. Most governments force pension funds to allocate a certain amount of their portfolio to government debt and some higher-graded corporate debt. Companies can also use debt issuances to buy back their own shares, pushing the share value higher, which in my way benefits the coupon you are receiving from your bond. Equities. A traditional way for companies to raise capital is to offer a percentage holding in their company in exchange for capital. A company normally does this to reinvest in their company to grow it and increase revenue. How you lose money with equities. There are so many ways that you can lose money with equities. ChatGPT can give you a far better set of these. Some obvious ones are: company default, complete drop in the share price, the listing of a company when the share price has dropped a lot, Hard to prove, but we sometimes see a company price having been driven down and then taken over, forcing you to sell your stocks at a lower price. Market manipulation, regulators may enforce fines, even jail people, but the chances of you getting your money back are low. Other features of this investment vehicle. The main issue that retail investors have when buying equities is that they're not as close to the market as investment banks and hedge funds. They collect vast quantities of data, build dozens of systems to manage their portfolio. Importantly, many of these professional investment companies are undertaking non-proprietary trading, not investing their own capital, and thus are not always a good indicator of whether a stock is a good or a bad investment. We all hear stories of big firms and individuals buying a stock, but unless we know the actual trading strategy, we have to consider it to be largely meaningless. Precious metals, yes, they are commodities, but as a retail investor, there are a myriad of influencers espousing the importance of holding your own precious metals to protect you from the risk of bad financial entities running off with your gold or the government stealing it. There is no doubt that this has happened and will continue to happen. The current bull run of gold in their view proves that gold is a good investment. How you lose money with precious metals. Sharp drops in the value of the asset. The illiquidity of the asset, you cannot sell this easily, and in difficult times even get market value. Physical versus paper, more on that later. Theft. Other features of this investment vehicle. This is the main aim of this article, so you will see this covered repeatedly throughout. Indeed, it mirrors my trading strategy with regards to cryptocurrency, although I am not doing the shady underhand approach that many influencers are doing. The idea that silver and gold gurus keep repeating is to self-custody precious metals and keep buying. I guarantee that most of these gurus are using paper instruments to buy and sell paper instruments to accumulate more capital to then acquire more physical. As a retail investor, you can do this, but in many countries access to the more sophisticated types of paper assets are just not there for retail investors. There are some individuals I would like to call out on this practice, but in keeping with the spirit of this article, I will not do so. In effect, all buy and hold precious metals holders are being rug pulled. At best, you are preserving your fiat value with precious metals, which as an aside is scary, as it shows just how much the average person is losing purchasing power in recent years. Pensions. It is worth repeating that none of this article is intended as financial advice, and this is my personal opinion on pensions. Personally, my own pension fund manager has done a good job on my pension, but given the precarious nature of financial markets, it is debatable what will happen when I retire. The idea of a pension is that an amount of your weekly or monthly salary is deducted, pre-tax, and allocated to a pension fund, a company pension, a self-managed pension, and that the government, by deducting some of your taxes, will put your taxes into a state pension. This article could be a book on why pensions are not as they seem. For me, they represent a certain percentage chance of having an income of sorts when I retire. Here are some ways that you lose money with pensions. Taxes on the back end. Once you start redeeming your pension, the government taxes you on income. Who knows what the taxation levels will be at that point in time? Company default. Just look into some famous examples of pension funds becoming worthless when the company issuer declines. Pension fund mismanagement. Despite all the so-called ring fencing and government protection, there are countless examples of this. Not beating inflation. I talk with individuals about how their pension is going. A famous one I've asked, is your pension beating inflation? Most haven't even given that a second thought. Another one to ask, is your pension solely in your employer's pension fund, and they say yes. Lost records. Details of employment get lost and people cannot access their pension. Again, this is a very contentious issue. Speak to a financial advisor. I don't wish to create panic, and am expressing my personal opinion on pensions. Property or real estate. If you are an American, property is perhaps the most falsely presented market there is. I'm not going to get into this too much as it is such a vast area to consider. Instead, we will simply list a few points to consider and leave it there. If you get a mortgage and pay off the principal plus interest offsetting inflation and then potentially paying capital gains tax in certain jurisdiction once that house is sold, are you actually making a huge profit? When you rent a property and have increased landlord requirements from the government requiring maintenance and other expenses, are you genuinely making any profit, especially in light of additional taxes? When you get problem tenants and have to pay expensive fees to evict them, is that returning a good yield? Can government regulations change that much during the course of your mortgage that you can severely lose out on the property? Think capital gains tax or changes in inheritance tax. Long-term instruments such as property can be subject to extreme risk through big changes in interest rates. What does this do to your potential profit? Those that use interest-only mortgages can suffer margin calls during low-value periods of the property market cycle. Some other financial instruments that carry their own levels of risk. Mutual funds and ETFs. Hedge funds. ISAs. Saving accounts. Real estate investment trusts, REITs. Peer-to-peer lending. Foreign exchange. Providing equity for startups. Contracts for difference. Perhaps the biggest fraud for most people. The biggest fraud in my opinion has to be holding cash. That's all I will say on the matter. Please do your own research. The cryptocurrency market. My personal journey with cryptocurrency. I started hearing about cryptocurrency in around 2017. This is because I have mostly worked inside financial institutions within fintech. They weren't that big on decentralized financial systems. Remember, this isn't just because they want to protect their industry, it is also because they want to manage their existing operations and minimize risk. Financial institutions operate under stringent regulatory pressure, and the idea that they would simply adopt open-source technology that is new is quite frankly ludicrous. In a way, this is kind of what has allowed cryptocurrency to flourish in the earlier times. Many organizations just could not get involved in the technology because of the perceived risks, rightly or wrongly. Many financial institutions started to try and write their own blockchains, which never got off the ground for obvious reasons. Once I had lost significant amounts of money in cryptocurrency, I started devise strategies to accumulate cryptocurrency steadily over time. My strategy was to focus on accumulating cryptocurrency and has remained my main objective. The key thing I learned fairly early are the following. Many rug pulls exit scams were genuine projects trying to get traction. Many rug pulls exit scams were institutionally led, not naming the obvious one, but we know what we're talking about. Most mainstream opinion on cryptocurrency has had the effect of keeping retail out of cryptocurrency. Most retail getting into crypto are going to lose large amounts of money, life-changing amounts. Most influencers that say they're buying a certain coin may not be using their salary to do so. External events does affect the price of cryptocurrency quite significantly, but most external events affects the price of other asset classes quite significantly. Drawdown risk is real. You will hold certain cryptocurrencies over a long period of time and the price will just fall and fall and fall and fall. Most announcements of new innovations and technology will not result in sudden massive increases in the value of that cryptocurrency. Friends that suddenly install an app or two on the mobile think they're going to make money in cryptocurrency. They won't. Very few retail investors getting into cryptocurrency have minimal understanding about how blockchain works and the importance of self-custody, not your keys, not your coin. Very few individuals have any understanding about basic financial rules and the implications of government regulation. A lot of the fearmongering around a lack of liquidity, there only being so much of a coin, creates panic that is often unfounded. SM channels are full of scammers using fake accounts, fake pictures, fake backstories, fake companies only too happy for you to give them your crypto. The market primary function appears to be to shake you out of your holding of cryptocurrency into lower forms of cryptocurrency and fiat. There are many well-intentioned influencers in the space just as there are in other asset classes. You will never realize as much profit as you could have. That would always be emerging coins and classes of coins that someone else is telling you to get into or get out of. The technology is not being used to anywhere near its capacity. Some will say that means we are early, others will say that's evidence that it will not manifest into much at all. My personal opinion is that cryptocurrency is simply becoming a replacement for bonds in the eyes of financial institutions. You need more than just technical analysis to win in this market. Accelerated ways to lose money. This is a true story talked to me by a friend I worked with in financial services. He told me about a colleague who lost £50,000 through investing in Bitcoin. They heard that Bitcoin was really high in value, and so they bought £50,000 worth with their life savings. The price dropped, come up, they sold it. The price increased, they bought it. The price dropped, they sold it, and so on. The misconceptions on shorting and perpetual futures. Those unfamiliar with shorting and those that think they are familiar with shorting probably don't understand what it actually means. You either own an asset, long, or you don't own an asset, short. Being short in this capacity is absolutely fine. There's no obligation on you to do anything on the basis that you don't own gold-plated hats. When you enter into a long position of an asset and decide to buy another asset in exchange for your long position asset, until that asset trade is settled, you are short the target buy asset. For example, you have $500,000 you have offered for to buy a house with, but you are short the house until the property completes. If the sale falls through, you still get to walk away with the $500,000. Without going into too much detail, many exchanges allow you to do short selling of an asset. A major way to lose money in crypto is to short coins in the hope that the price will fall and you can buy them back cheaper. It is more nuanced than this because effectively most are doing naked shorts. The critical thing here is that the price is determined by the exchange and margin allocation will invariably be taken if the short asset moves to the upside. For this reason, not financial advice of course, as with the rest of this article, I never do shorting in the market form of most crypto traders. The way that I short is that if I physically hold an asset and have reasonable confidence that the price will fall, I may sell it and then put in a limit order to buy back when that price has fallen. If the price doubles, I have lost out on upside potential, but I haven't actually lost physical fiat monetary value. My hope is to acquire more cryptocurrency in the possible future that the price will rise. Not understanding lag in market announcements and crypto influences publication of new intentions. Markets are emotional, sentiment it is a reflection of that, and influencers are not computers. If you uploaded a video to YouTube, you know it takes time to actually upload it. An influencer making a statement on Twitter may have made their trade days ago. Maybe they went on holiday or are moving house. You just don't know their time horizons, how consistent they are in their methodology, and why they're discussing the particular perspectives they hold on the market that they are. This does not mean we should not look into the many great people involved in the space and their content, but we must be very careful to take it literally. An increasing trend is for lesser-known influencers to quote other influencers whom themselves may have quoted other influencers. I myself may share other influencers' tweets and videos. Some professionals are super busy and just put out content when they can. For that reason, always pay attention to being drawn into emotive content that may be significantly out of touch with the current market trend. Being drawn into DeFi staking projects. I myself did try and stake a coin of an emerging gaming protocol and probably lost most of it based off of a channel advocating the potential of this coin. We will all fall for these types of scams. It wasn't very much money at all, but it all adds up. Using trading platforms that does not have the underlying assets for you to take off into your own custody. The number of times I get shown some app on a friend's mobile that they installed and they think they're buying cryptocurrency is staggering. I check the fees, and they are exorbitant. They asked me questions such as which coins to buy, why hasn't this one gone up, or tell me that they've lost money on a coin. What do you say to people like this? The best you can do is try to give them a minimal amount of education, but they don't want to hear about that, they just want to become rich. Not understanding X gains and X losses. Yes, I've covered this one before, but the idea that you will put in $100 and become a millionaire is ludicrous. It is just as ludicrous as putting in £100,000 and expecting to not lose most of it. Social media channel scams. As you start to learn more about cryptocurrency, you will start to use social media channels to learn more about your preferred coins and blockchains. Once on these channels, you will get direct messaged, DM, by users looking to get you to join the platforms that offer fantastic returns, and all you have to do is deposit some cryptocurrency. Most blockchains, once you send that value, you can never get back. These types of platforms often use the money from newer customers to pay the older customers to give them the idea that returns are coming in, and at some point the platform will shut down and all the capital withdrawn in what is known as a classic exit scam. I have spoken with a lot of these so-called scammers, and many of them are completely unaware that they are scamming people and are actually genuine individuals that believe they are onto a financial certainty. Some of these scammers have lost tens of thousands of dollars themselves because they built up capital for the platform only to find that the money they thought they had saved to draw down from in the future is no longer there. Just the other day I had somebody DM me. The conversation went something like this. "Hey, how's it going?" "Not bad, thanks. How are you?" Already expecting this to be a scam. "Where are you from?" "Country XXX, where are you from?" "I'm from Switzerland, Bern." "Oh great, I was in Switzerland recently, it's a nice country." "I'm an accountant from Switzerland, but I also do investing accountancy, therefore is not my only source of income." "Great, do you have a LinkedIn profile? Who do you work for?" "I'm sorry, I don't understand what you're asking." "Most people have a LinkedIn profile, perhaps you do too, so I can check you are who you say you are." "Come on, that's silly, of course it's me." "I notice your surname isn't Swiss, perhaps you married somebody from Scotland?" "I checked online for the provenance of your surname and it appears your surname is Scottish." "How did you know that I married somebody from Scotland?" "Anyway, I wanted to tell you about this great platform. It offers fantastic returns and I'm making a lot of money through it. Please tell me the company and I'll look into them, thank you." "Sure, here is the certificate of incorporation." I then go online and do the following. Check their website. Normally I see that the website has been designed in WordPress, nothing wrong with WordPress, but these types of sites can be put together quite quickly. I check their content and find frequent grammatical errors. The company that they say is registered is either a dissolved company on something like Companies House or in other countries equivalent government incorporation scheme. I check the office location and it often doesn't stack up. Often, I then do the following. Explain to the individual that the company may be a scam and is likely to be fortunate and that they themselves could be on the hook for fraud. It does not matter if they knew it was fraudulent or not in many jurisdictions. Explain that if I partook in such a program by myself on the hook for being involved in fraud. Explain that the amount of money being offered by way of return are completely nonsensical and unachievable. Often I close the conversation by saying, please do not get involved in this type of scam. You may eventually lose all your money and could yourself be guilty of abetting fraud. This is not a professional opinion, but please consider what you are doing. Occasionally, people come back to me and tell me that they lost all their money. Other variations include obvious use of ChatGPT to generate conversational points that try to infer some degree of relationship between you and the other party. This can go on for a while and sometimes reciprocate for fun by creating a conversation channel in ChatGPT to reply to them for weeks. Occasionally they realize that I'm doing the same as what they are and they close the conversation after having had their time wasted. Remember, these scams go on not just in cryptocurrency. Whether reporting in these types of scams is required in your jurisdiction is for you to know, but it would become a full-time job to continually report these scam attempts to regulators. Taxes. Governments are seeing cryptocurrency as a cash cow, and you may be in the unfortunate situation where governments can come after you for money that you no longer have. Personally, I will be looking to professionalize my investment strategy or move to a jurisdiction which is more crypto-friendly, but it is worth highlighting this as a risk. Note, it is interesting that many tax-free government schemes push people towards more traditional financial markets that also tax incentives, but don't do the same with cryptocurrency. Make of that as you will. Wrapping up this article and what I do to try and remove the noise when involving myself in any investment. Information is key. The one thing I've learned, some having worked in financial institutions, is the amount of information these institutions process is unfathomable to the average person. No retail investor can have access to the same amount of information on the market that these institutions have, but you can get access to useful information that may offer different perspectives. If you are going to be involved in a market, you have to have regular, reliable sources of information. Information must be actionable with some degree of confidence. Personally, I use multiple platforms and produce reports to try and understand the market on a consistent basis. Yes, shameless self-plug, I do use Crypto Statto. However, I do not just use Crypto Statto. I cannot get more honest than that. Emotion is your enemy. Reacting to influencers and announcements is human nature, but try to be rational in your decision-making. Learn about the projects you are thinking to put your capital into. As a technologist, I do have a strong advantage in understanding what makes sense and what is unfeasible. If you don't understand technology, this does not mean you cannot look into projects, but try to get a feel for what you think this blockchain or token can provide. Spreading your custody. Imagine you have $200,000 in Coinbase. To quote the Dustin Hoffman film, The Marathon Man, is it safe? I like Coinbase. I think what they're doing in terms of offering more tools to developers and market participants outside of just trading is fantastic, but would I have all of my money on their platform? Would I put all of my assets on a hardware wallet? Where would I store my passwords and keys? Can I trust custody solution providers to hold my assets? Try to get to a point where you are no longer putting your own fiat into crypto. This sounds impossible, but this is precisely where I am. Have I still put some crypto in the last year or two? Yes, tiny amounts. Only when I wanted to acquire a cryptocurrency I felt was undervalued and I didn't want to exit active trades between other asset pairs. Follow many influencers and understand what they are truly about. I personally know some influencers. It is vital you try to understand what their approach is. They may not even explain what their trading mechanism is, and you may be acting upon information that fits their trading strategy and not yours. Be aware of misplaced optimism and pessimism. On the one side, we have highly enthusiastic individuals pushing the market, and on the other side, we have mainstream media telling us that everyone involved in cryptocurrency are criminals and drug dealers. It is a fantastic technology offering huge benefit to society as a whole. My personal interest is to build real products as the right blockchains emerge. This is my belief, and you should have your own convictions. Take the highs with the lows. The one thing crypto teaches me is that you can go from feeling king of the hill to stig of the dump in a matter of hours to weeks. There are millions of people with assets in other classes that are on a long-term downward trend over many years that happens in days in crypto. Thank you for taking the time to read this. Keep learning, keep it real.